So before we get started, check out the following links in the description box below as highlighted in the image shown. So you'll be able to get our past papers, our link to our official website, link to accreditations, our link to donation page, and contact details in the description. So once you'll be watching a certain video of any lesson or of any past paper, you'll be able to get all these links, and you can be able to get to download past papers, to reach to our official website. You'll be able to see links to our accreditations so that you can see which authorities have accredited us. You'll be able to reach to our donation page as well as our contact details.
So welcome class. We are going to discuss ATD level 1 paper that was done in August 2024. And we'll start by looking at the first part of it, the first 10 questions, as we move on. So let's go straight to the questions, and we start with question 1. What does the term full disclosure principle require? What does the term full disclosure principle require? A, reporting only significant information, not really. B, disclosing all relevant financial information, perfect. This is most likely the correct answer. C, just a minute. C. Okay. C, reporting all transactions in the footnotes, not really. And D, hiding confidential information, no. So the correct answer here is B. What does the term full disclosure principle require? It requires that we'll disclose all relevant financial information. This is very important. All and relevant financial information that will allow informed decisions or judgment. So any information that is relevant that will influence the decision or judgment of the user is deemed to be relevant and must be disclosed. That is what the full disclosure principle requires. It doesn't necessarily mean that we report only significant, no. We report all the relevant. That is totally different from reporting only significant. Reporting all the relevant financial information. So that is the correct answer to that question is B. Okay, let's move to the next item. Prepaid expenses are recorded as liabilities. Prepaid expenses recorded as liabilities? No, they are not liabilities. These are expenses that you will not utilize in this financial year. So they are treated as assets waiting to be used the following year. It's as good as you've saved some money for next year. So it's as good as an asset, not a liability. So prepaid expenses are recorded as liabilities? Definitely no. Recorded as assets? This is very much correct. They are not recorded. No, they are recorded and captured because this is money that has already been paid and it's not yet used. It will be utilized the next financial period. It has to be recorded as so. And then expense immediately? Not really. They will have to wait for the following year, the accounting period that they relate to, before they can be expensed for that year. So as it is currently, this is not the accounting period that they will be expensed. So it will be treated as an asset. So the correct answer is B. Which account would you credit when you provide a service? When you provide a service, this is treated as a sales. So which account? Normally when you provide a service, that's a sale. So you are supposed to credit sales account. Sales account is a credit entry because it's revenue. Sales is a revenue. So when you provide a service, you credit the revenue account or the sales account. And actually that's what we have there as Roman A. So this is going to be the correct answer. But let's read the rest. Accounts receivable, not really. Accounts receivable will come in when we talk about the data. And we generally, the data will come at the later stages, not at this point, because we are just provided a service. So we are going to create, what we are going to do is to, if it's a cash sale, that is after you generated the service, you paid for it, then you're going to credit the sales account. And then it's a cash sale. We will debit the cash account and credit the sales account. That's what will happen if it's a cash sale. If it's not a cash sale, then you are going to credit the sales account and debit the respective individual account who has not paid yet. So you'll pay later. So we'll debit that person and credit the sales account. Whichever way you look at it, we are going to credit the sales or revenue account. Cash account, yes, we said we will debit this if it's a cash sale. But this is debited, so you can see. Account payables, not really, because we are the ones providing the services, so this is nowhere. So the correct answer is A, revenue account. We will credit. This is a sale, and so when we offer sales, we credit sales. Revenues are a credit account, and here we are offering a service, so we expect to earn from it, and so we will debit either cash account or accounts receivable account, and then we credit the sales or revenue account. So A is the correct answer. Which of the following financial statements provide report of assets? Which one of the following financial statements provides report of assets, liabilities, and shareholders' equity at a specific date? This is a statement of financial position. Statement of financial position. Initially, we used to refer to it as a balance sheet. It shows the assets and liabilities of the firm, or assets, liabilities, and capital of the firm. And that's what this question is asking. Assets, liabilities, and capital. So we are talking about balance sheet or the statement of financial position. It shows the position of the business as at a given point in time. Yes, here we go. We already have it there. So the correct answer is A. But for the sake of it, let's look at what B, C, and D presents. B says statement of profit or loss. No, this one shows the net profit, trading, and profit and loss. Actually, statement of profit or loss. This is not even trading. This is just part of the financial statement. Then C, statement of cash flows. Yes, this is a cash flow statement. Shows how money has been moving in and out of the organization, the movement of cash generally. Then statement of shareholders' equity shows the movement of monies by the shareholders or equity of the firm. So the correct answer is A, statement of financial position. It shows assets, liabilities, and equity. Okay, era of casting refers to era of casting. We've always heard of double casting, such like stuff. Errors of casting generally are errors that are as a result of wrong additions. Wrong additions in most cases. We talk about wrong additions, overcasting, undercasting. Wrong additions. They are normally as a result of wrong additions. So let's look at what we have here in our options. Error of casting refers to incorrectly adding amounts. Perfect. This already goes. Takes it. Errors of casting refers to incorrectly carrying forward balances. No. Errors of casting refers to incorrectly posting entries. No. It's not incorrectly posting entries. When you correctly post entries, possibly we talk of different types of errors like transposition, error of transposition, where you change some figures in between. Most cases we'll be talking about errors of transposition. But casting is as a result of adding figures incorrectly. Then omitting entries from record, that is error of omission. Have error of omission, have transposition errors, carrying forward balances, that's not, it's neither here nor there. Error of casting refers to A, that is the correct answer, incorrectly adding amounts. Thank you. And normally we talk of overcasting or undercasting. Question 6. XYZ Limited's total assets as at 31st December 2023 were 500,000. Total assets 500,000 and its total liabilities were 300,000. Determine the owner's equity for XYZ Limited. This is a very simple question and straightforward, really. Quite straightforward. Assets is equals to capital plus liabilities. Initially, we used to talk of assets is equals to liabilities, but no, liabilities can be broken down into capital plus liability. So if assets is 500,000, I mean total assets 500,000, and total liabilities is 300,000, plus C. Then they're asking, C is capital, which is also equivalent to owner's equity. So they're asking the owner's equity, which is C. C is what they're asking for. So it's C is equals to 500,000 minus 300,000. It's just as simple as that. This is 200,000. Do you have 200,000 here? Yeah, it's A. So A is the correct answer. A is the correct answer. Let's look at the options they had. 500, no, 500 is the asset. 300 is the liability. 200 is the, yeah. And you see, if you add this now, it will be assets 500,000 is equals to capital 200,000 plus liability 300,000. So 500,000 is equals to 500,000, which is okay. Okay, so let's move on. The correct answer there is A. A is the correct answer. Why am I feeling that we had so many S as being the correct answers? Let me just check. You know, sometimes the examiner was so friendly with the S. It's like we are getting our answers right before we start. So this is B, then A, then A, then A, then A. Okay. So number 7. Calculate the value of trade receivables if the outstanding invoices from customers total 8 million and an allowance for doubtful debts of 500 is applied. Calculate the value of trade receivables if the outstanding invoices from customers is 8 million and an allowance of doubtful debts of 500 is applied. So straightforward question. It's 8 million minus 500,000. You get 7.5. Yeah, 7.5 million. So the answer is C. That's how direct that question was. I mean, calculate the value of trade receivables if the outstanding invoices from customers 8 million, allowance for doubtful debts 500,000. Allowance for doubtful debts, we definite this allowance for doubtful debts or provision for doubtful debts has the effect of reducing the balance, reducing the trade receivables in the balance sheet or in the statement of financial position. So normally what we do, we take trade receivables less provision for doubtful debts, or you can put the provision for doubtful debts under current liabilities. Still the same thing. So it has the effect of reducing the trade receivables figure. So the value of trade receivables, if we apply an allowance of doubtful debts of 500,000, will be 7.5 million. So the correct answer is C. The correct answer is C, 7.5 million. Question 8. And this is what will be found, just before we go to say, this is what will be found in the statement of financial position. And then this will be found in the statement, this will be found in the financial statement. Financial statement. Allowance. Allowance will be in the financial statement. Then the value of trade receivables as at the end of the year will have to be reduced by that, by the provision, which will now make it 7.5. This is what will be in the balance sheet. And that is what the question is asking. The value of trade receivables, probably at the end of the year, it will be 7.5. So question 8, Mamboleo Limited purchased equipment for 20,000 shillings on 1st January 2023. The equipment has an estimated useful life of 5 years and no salvage value. If the company accidentally recorded the purchase as an expense instead of a capital expenditure, what will be the impact on the company's financial statement for the year ended December 2023? Wow. This is what we refer to as an error of omission. Sorry, an error of principle. Error of principle. This is an asset. Instead of recording it as an asset, this is if the company accidentally recorded the purchase as an expense. Yeah, instead of recording it as an asset, because this is an equipment supposed to be recorded as an asset, the company accountant accidentally recorded that as an expense. Wow, what will be the impact on the company's financial statements? Yeah. Of course, expenses will be overstated. Expenses will be overstated generally. Assets will be understated. Assets will be understated. Expenses will be overstated. That is the obvious from the face of it. Expenses will be overstated because you've included an expense which is not an expense per se. You've also not captured that cost as an asset, the cost of that equipment as an asset to the organization. So it means assets will be undervalued, expenses will be overstated. Okay, so let's look at what the answers are. Number 1, net income will be overstated. Net income will be overstated. Net income will be overstated. It could be correct. Net income will be overstated. Yeah. There's a trick here. Net income, not net profit. If this was net profit, it could be right. It could be right. Why? Because when we overstate the expenditures, for example, this was 5, this is 3, this is 2. So if you overstate this to 4, then net profit will be 1. So if expenditures increase, net profit reduces. This is not correct. This is not correct. So let's leave it first. But it's not correct. It's just there to confuse us. That's not correct. And again, remember what the angle that I was coming in with from I was using, that this is net income. There's a difference between income and profit. So income has not been affected. Income has not been affected. We're talking about expenses and assets. So this is definitely wrong. Then total assets will be understated. Total assets will be understated. This is correct by all means. Total assets will be understated because you're supposed to include that cost under the assets, but it has not been included. So definitely it will be understated. See, equity will be understated. How now? Nope. No. Cash flow from operating activities will be overstated. Not really. In fact, here we are talking about, maybe expenses, but we expect possibly they could have talked about investing activities. And anyway, let's not go this direction. This is not correct. So the correct answer is B. B is very straightforward. Why B? Very straightforward. That the total assets will be understated because you're supposed to treat it as an asset. It's a purchase of equipment. Equipment is an asset and you've not captured it as such. So you'll understate the total assets. So B is the correct answer. Question 9. Calculate the prepaid expenses if a company pays 1.2 for annual insurance premium coverage and had used up 9 months of the coverage by the end of financial year. The company had paid 1.2, but it only used 900,000 because 1.2 is for annual, and we have how many months? 12 months. It means every month 1 million, and it had used up 9 months, so 9 times 1 million is 9 million. 900,000. Yeah. So calculate the prepaid expenses. If a company pays 1.2 for annual insurance premium coverage and had used up 9 months for the coverage by the end of the year. Prepaid expense is 300. It's only 900 that is for that year, but they paid 1.2. So the 300,000 will go to the following year. So we call that prepaid insurance. Prepaid insurance. Call that prepaid insurance, and it's 300,000. So prepaid. Calculate the prepaid expenses. It's 300,000. So let's just get for 300,000. Here we go. B. That is correct. So that is the answer. Let's go to the next item. The next item. John Murray's company purchased an office equipment costing $47.30. The cost of the equipment was entered in the books of account as $43.70. This is error of transposition, what we are talking about up there. What type of error is this? Yeah, we are done. It's a transposition error. So the answer is C. Transposition error, when you capture figures wrongly, you post wrong figures, and in most cases you interchange. Like this one, we talk about 73 and 37. Very clear. 73 and 37. The figures have been interchanged. That one is transposition error, and it's already here. Error of partial omission, you capture debit, you forget credit. Error of original entry, you make the mistake in the books of original entry and you keep on transferring to the ledgers as you go on. Compensating error, miraculously. Okay, it's a miraculous error where you miraculously make a mistake by maybe double debiting, and at the same time you make a mistake by double crediting, and then they balance. It's an error that is miraculous in nature. But go and read it. It's not easy to happen, but it happens anyway. Okay, the correct answer is transposition error where you interchange the figures. That is the end of part 1 of this lesson. Let's meet in part 2, where I will be answering question 11 to 20. Thank you.
So if you like this video, you can always enroll with us. You'll be able to access more of these revision sessions. And also you'll be able to find well done lectures or pre-recorded videos for all the KASNEB courses as well as CHRP. And in case of anything, you can always reach us out. We have our contact details on the screen. Feel free to call, feel free to WhatsApp anytime. So thank you, and let's meet in our next session.